Hey there, this is Nick and welcome back to Module 3 where we're going to talk about renovations and capital improvements. This is one of my favorite aspects of bookkeeping because we're building something, right? Whether we're an investor or a builder, we're adding value to the property and we want to make sure that we put it in our books the right way. That's what we're going to focus on here in Module 3. We're going to talk about the ins and outs, the details, and one of the most underutilized features within QuickBooks Online. So let's get to it. First thing I want to mention is that whether you are a flipper or a long-term rental investor, you will be improving your property, okay? Obviously, flippers are doing a little bit more of this. We're doing bigger renovations. However, long-term investors are certainly doing capital improvements as well. So understanding how these work and how they can differ based on the project you're doing is absolutely essential to a clean set of books. So the three things we're going to talk about today when it comes to renovations and bookkeeping. First is understanding the difference between a capitalized cost and a expensed cost. Okay, so this is a differentiation between does the transaction show up on your balance sheet as an asset or on your profit and loss as an expense, all right? Now the type of project we do is going to help to determine that. Number two here, we're going to leverage products and services. This is that underutilized feature within QuickBooks Online. This is going to turn a lot of things on when it comes to job costing and understanding how much we spend in very specific areas of our project without blowing up our entire reporting infrastructure. And third, we're going to talk about construction loans and depreciation. We probably have them, right? We're taking draws on loans. We're tracking depreciation as well at the end of a tax year. So let's get into it, starting with CapEx versus expenses. Now I use the word CapEx just because it's a little bit quicker. So CapEx, capital improvements, whatever the case is, I'm going to call it CapEx. So when to capitalize? So for large projects and renovations, we will typically capitalize, right? So that's the first thing. If we're doing a renovation, we have an expense. We're not sure, hey, is this capitalized or is it expense? How big is it? The larger the expense, the more likely it is that we're going to be capitalizing that expense. Expenses exceeding $2,500, that's a rule of thumb. It's not 100% ironclad, but that is something to think about. If you have a long-term rental property and you buy something that's more than $2,500, you're probably going to want to capitalize it at least to some degree. Now, to some degree, meaning we can capitalize with a 30-year lifespan or something like a 5-year lifespan. Your accountant, your CPA is going to help you figure that out. But where we put it on our balance sheet initially is something that is up to us. It is not used for unit turnover expenses. Okay, so if you have a rental property and you got to go through and hey, it needs a new toilet. Let's replace a toilet. A toilet's $300-400. It's lower than that $2,500 threshold. It's a quick thing to kind of turn the apartment over. You're not going to capitalize those expenses. That's part of the normal operation of a rental business. Same thing with supplies and light bulbs and light fixtures and painting an apartment, even replacing the carpets. Sometimes you might want to capitalize that, but often just take the deduction when you can. And lastly, flip renovation. So at the time of the expense, I'm going to teach you to do a cost of goods sold for those flips. We might move that over to the balance sheet if our flip lasts longer than 1 year, but our initial expense is going to go to our P&L. We're going to track that against our profitability. So let's see this in QuickBooks and let's just understand where things go. So we mentioned we got balance sheet and we have profit and loss. So let's look at our chart of accounts. We should have within our chart of accounts somewhere to capture these expenses when we are doing CapEx. And you see I have it right here, CapEx. It's a sub-account of my real estate owned. So I'm going to track the land in the building when I purchase the property along with the closing costs. Then I'm going to add some CapEx to it. Notice I have a little furniture thing right here. This is just an example I did for a short-term rental investor. All right, so you could potentially separate these out as well. If you wanted to have sub-accounts and really specifically appliances might be another example, you can do that. But you could also just put it all to CapEx and use products and services, which we're going to talk about next, to differentiate. So we have it there from fixed assets on the cost of goods sold. Again, if we're doing flips, or even if we're not doing flips, we have long-term rental. So long-term rental, you're going to want to put your renovation expenses to repairs and maintenance. Those are these expenses that we're not capitalizing. Okay, smaller expenses, turnover expenses. For flips, you're probably going to have a really specific rehab costs right there. So that's where they show up on the chart of accounts. Let's see it in practice. Let's just create a simple expense. Looking at my balance sheet, we're going to carry on with the example we had in Module 2. I have the $650,000 building. Let's say that I spent some money on a new roof. Okay, so we spent money out of our account here. I'm going to put this in 2018. Okay, we spent money on a new roof, so we can put that to CapEx. A new roof is almost always going to be a CapEx. It's going to be somewhere, $20,000, $30,000, way more it could be, right? We're going to put that in there. We can just say new roof, and that is going to be something we're going to capitalize for sure. Okay, so I'm going to save and close that, and this should show up now in my balance sheet, and it adds to my basis. Okay, so there it is right here. Contrary to that, if I were to record an expense and track it as repairs and maintenance, that toilet example that I had for you. Okay, so replacing the toilet, $450 goes to repairs and maintenance there, same class. We'll save and close that. And now that will show up, not on my balance sheet, doesn't impact this at all. It goes into my net income and it will show up as that repairs and maintenance right there. Okay, so that's the two options we have, right? It can either go to our profit and loss or it can go to our capital improvements. All right, now if we're doing that flip, for that flip, let's go back to that roof. If I'm doing a flip and I just replace the roof, I'm not going to put it to CapEx. Okay, I'm going to put it initially at the time of the expense to cost of goods sold. All right, because that's how we as flippers are typically thinking about our expenses. So I'm going to go rehab costs right here. Okay. Now in a second, I'm going to show you why we're not going to use category at all. But before I do that, let's just put it as a rehab cost. That will now go to my P&L. Okay, it comes out of the CapEx and it has gone down to my P&L. Okay, so that's how we can potentially put these expenses either in the balance sheet or, in this case, you can see on the P&L. All right, those are our two options that we have, and understanding that is absolutely essential. Okay, now the cool thing too is we can move them around. So I teach to put everything in the flip into our cost of goods sold, but we can and we will move those expenses over to the balance sheet as we cross over a calendar year. We don't want to take those deductions until we've sold the property. So if we have a flip that spans over 2 tax periods, we're going to push everything forward and we're going to use the balance sheet to do that, which we talk about in the advanced techniques in module 5 and 6. All right, so that is our first point. Now, the second, what we're going to talk about is products and services. And as I mentioned, this is a very underutilized feature within QuickBooks Online. So what is products and services and how can it augment our reporting? It adds an additional dimension to our QuickBooks reporting. I'm all about dimensions here. I want you to be able to get the best of both worlds in that we have a really concise, really useful profit and loss and balance sheet, but we can then drill down into it to get some really insightful details. It's also the optimal link, as I'm going to demonstrate, between external software. So something like Builder uses what's called cost codes, okay? Products and services are the exact same thing. They're just called something different. We're going to marry those two up if and when we are connecting those services. Other external software is going to do the same thing. This historical data makes us way more accurate for future projects. Okay, a note on the external software, even if you or your client is not using anything like that yet, they might in the future. And setting this up and using products and services has so many benefits beyond the external software, but having it ready for the external software is a really huge plus, making that switching cost go way down. All right. So why aren't categories enough? So categories define our chart of accounts, right? You saw me put it to CapEx. You saw me put it to rehab. What we do, we have a tendency to list all of our cost codes, our cost categories. And what we're talking about here, I'm going to show you, is demolition, drywall, rough electric, rough plumbing, all of those types of categories. The tendency is to list those all as chart of accounts. The problem there is it blows up our profit and loss, it blows up our balance sheet, it just gets to be way too many. We often have 100, 150, 200 of these cost codes, which is way too many for that report. We don't want to continuously change our chart of accounts or our categories list. We want to set it and forget it. We want to keep it really stable. That is a sign of a really good set of books if we're not changing our chart of accounts too often. Here's how it works. We're going to turn on the items table, okay? In the expenses, we're going to add or import our list of products and services. I provide an import template if you'd like it. We map our products and services to each specific P&L or balance sheet account. And then we're just going to start using items instead of categories. All right, let's see it in practice within QuickBooks here. All right, so that expense that I had, that CapEx, which actually left, it went away because we moved it to the net income. This exact transaction, you saw that I added it as a category. I used the category field, and that's really the only option I had because I hadn't yet turned on products and services, okay? I'm going to do that right now. All right, so I'm going to go to turn that on. Before I do, let's just talk a little bit about what are these products and services? What are cost codes? If we look at, an analysis of a flip before it's purchased, that'll give you some insight as to what you or your clients might be using for cost codes. Okay, so how do we budget for a renovation? We're usually using some kind of category list. Here you can see I got a stage and I got permits, demo, house secured, rough soil, rough plumbing, rough electrical. Now your list is going to be different and we can debate forever how specific they should be, and that's not the point of this video right now. The point is that you have a list, your client has a list, and we want to have that list available to us to use within QuickBooks Online. Now I do have a products and services list that you could download if you'd like to. I have a simple one and I have a complex one. Okay, and again, depending on the type of business you have, this list and this is going to be a little bit different as to what would be useful for you. Okay, so let's get into how to turn this on. To do this, we're going to go to our accountant settings. We're going to go to expenses, and right at the top, show items table on expense and purchase forms. We're going to turn that on. We're going to click save. All set there. We'll click done. Okay, so we've turned that on. That looks good. Now let's start using it. Okay, so that exact transaction, pull this transaction up, this $20,000. I want to show you the alternative way to do this without losing really anything. So this new roof that we had, okay, shows up as a category here. If I go to my item details, this is what's new. Because I turned this on, this items table now shows up. Now I have this drop down for product or service. Now I've added my list already. I'm going to show you that in a second. But this is where we can indicate, hey, I want to spend on a roof. Okay, now because I'm doing this, I don't need this. I'm going to get rid of this. And in the description, I can say whatever I want. I can say new roof, and it's $20,000. Okay, and there's my class or project, whatever. Okay, now the key here is that we in the background, we've established that this product or service will go somewhere over here automatically. That's why we don't need to list both. So I'm going to save and close this. When we look back at the transaction report, nothing will have changed. It still shows up as rehab expenses. Okay, let me drill down into it one more time. It still shows up as rehab expenses. I can drill down into this, and now what's cool about this is I can group by product or service. And there it shows my exterior, my roof, etc. All right, I'm going to come back to this in a second. Okay, let me show you where this all happens. We go to settings, we go to products and services, and this is where your list is going to live. Now, you're probably used to using products and services for rent, right? So we're going to talk about that in Module 4 a lot. You're selling stuff. It makes sense, products and services, but we can use it for expenses as well. You see, I start listing out my categories, my different cost codes here in my products or services. The really essential part of this whole entire thing, here's roof, is when we set this up, we have to indicate that we buy it. And that's this check mark right here. Me indicating it here will make it show up in our drop-down list. And then right here is where we map it to the chart of accounts. Now here you might have the question like, all right, well, what if I flip and do rentals? Where am I gonna map all this? I'd map it all to the place where you do most of your work, okay? So if you do mostly flips, put everything, including your long-term stuff, to this the flips expense account. You can always use a journal entry to move it over. We'll talk about that in advanced techniques. Put it all in one place so you have one nice consistent list of products and services. I showed you that we can add that and we can do our group by. Let's see that in a better context where we get a little bit more of an idea of how useful it can be. I'm going to go over to this set of books here. And I want to show you kind of what I see all the time, which is within the chart of accounts, we list out those cost codes as accounts, and we don't want to be doing that. But I'll just show you an example where a client of mine might say cost codes, and they'll list all their cost codes. In this case, I think they did like 30 of them, but you can see this huge list of cost codes, right? And this probably isn't all of them. And so that's a tendency we might have. What that does, unfortunately, is it gives us a really tough looking profit and loss, or balance sheet, whatever the case is. This whole list shows up here. Of course, we can minimize it and whatnot, but we'd have to do that every single time. This is going to get muddled in with a really concise P&L that would be potentially useful to us, okay? So we do not want to do that. If we make the transition over to our products and services, we can do something like this. In the other year, I kind of brought it back to how we want it, which is instead of like rehab, I have construction materials and subcontractors. If I drill down into this one, this whole thing, I can take this whole list and I can do group by product and service, and I get a really nice listing and understanding of how much I'm spending in my different categories. And I can bring all these up. So useful for job costing to know how much we spent and comparing against our budget. Okay, to that end, comparing against our budget, we can do that in an external report, so we can dump all the data out. I do this all the time, dump all the data out into a Google Sheet, and then we can report on it. We can see how we're doing compared to our different budgets. Also, I mentioned that builder trend is a thing. So if we look at our budget on builder trend, we might be able to see how much we're spending as well. So we have all our cost codes there. All right. That link is going to be key between QuickBooks and your external software, in this case, builder trend. Okay. So products and services, again, one of the most underutilized features within QuickBooks Online. Get used to it. Definitely use it for you and your business, not just for sales, but in this case for expenses as well. Okay, so let's continue on. For the third thing we're going to talk about is construction loans and depreciation. All right, these are really a lot simpler than they might seem. Okay, so construction loans, they're like escrow accounts. Usually what happens is we get a loan funded and the entire loan goes on our liability, and then an amount goes into a construction escrow account that we treat as an asset. What we're going to do is we're going to spend money out of our checking account and then get a draw, or we're going to have our bank automatically pay our vendors directly. So we owe the account funds, we just don't have the control. We own it, right? We own that money, we just don't have control over it. So we're going to spend from that and then draw from that account. All right, that's how we do construction loans. Depreciation is really easy. We're going to do a single year-end transaction to pull in all of our depreciation, credit our fixed assets, debit our depreciation expense, and we will not depreciate our assets itself quickly like our flips. All right, let's see this in action within QuickBooks. Now, looking over at this loan that I have. So I have a loan for this property for $785,000. I only bought it for $650 or so, right? And so that $175,000 when we closed on the loan went into an escrow account. I'm just going to close some of this stuff out. Went into an escrow account. I own this money, but I can't control it. This is the most common way that a construction owns are dealt with, okay? It's just like a tax and insurance escrow account. I just can't control this. So what usually happens is we spend money. So I spent the $20,000 on the roof. I might spend another amount of money on something else. Let's do some framing on this property. Let's go to framing and subfloor. We spend another $35,000. Okay, so I'm going to spend from my checking account. That's usually the way it works. I'm going to show you an alternative in a second. Okay, so our checking account is going to go down, and then at a certain point in time, we put $35,000 into it. We're going to get a draw, and that draw is going to come from this construction escrow. And we could just do that as a simple deposit. We can do that as a bank match, so it could come through our bank feed as well. Okay, so the money went into our JMB checking account. Where did it come from? Came from our bank. Okay, what was the account? Construction escrow. And what was the amount? In this case, $35,000. It doesn't have to be exact, but often is, however much you spent. Okay, save and close. What will that do? Now I have to make sure that this date is correct. It is good, okay? What that should do is it should put the cash back in my checking account and pull it out of my construction escrow account. So this account goes down. Now that's the most common way it works. Sometimes our bank can pay our vendor directly. Okay, so that can happen through a journal entry. Usually what would happen there is we get a bill from our vendor. So let's say Oakvale Homes is a company that we have to pay. And let's say we pay them for rough electric. So this would be a bill that we receive. Maybe it's rough electric and rough plumbing. Maybe it's like a general contractor. There's a ton of stuff in here. $25,000, $35,000. Whoops. Okay, so I got this bill that I owe. $60,000 I owe to this person, to this company, okay? So how are we going to pay that? Well, I could pay them in cash, but a lot of times I don't have the cash and I need to be paying from the construction escrow. Okay, so there's my $60,000 accounts payable, right? We had $60,000 come out of net income. Now this CapEx, let me just go into this real quick. Oh, this is for, okay. So this was that framing. I have some of these set up to go to CapEx, some of them to go to rehab expenses just for demonstrating, so don't worry about that. They should all go to the same spot. All right, so this $60,000 I owe to Oakvale Homes. How do I deal with that? Well, here's how it works. It's gonna come out of construction escrow. I can't really like transfer from this one to this one. So what we're gonna do is we're going to record a journal entry, okay? And we're gonna say that our construction escrow goes down $60,000 because the bank paid our accounts payable $60,000. Okay, we're going to make sure we indicate that went to Oakvale Homes. You could put this to the class, but actually it's a balance sheet transaction, so it kind of doesn't matter. Okay, so that's going to zero out our accounts payable. It's going to reduce our construction escrow. Now there is one extra step we got to do just because it's still going to show up as an open invoice for Oakvale. So I got this kind of like this payment due. So I can take this open bill, click mark as paid, and it's going to find my journal entry and mark it as paid perfectly. All right. That's how we work with draws. Okay. That draw will eventually go to zero. Sometimes it doesn't go all the way to zero, which just means that's either going to be paid out or maybe it's going to be overdrawn. You're going to owe some money back. And that's something you have to monitor. Let's talk about depreciation. All right. So what's going to happen is you have a building and then you have capital improvements that are going to build up, and it's going to add to your basis. And then at the end of the year, you're going to work with your tax professional, your CPA, to depreciate your building, your CapEx, and amortize your closing costs. Okay? That all happens at year end. All right? And it's going to look like something like this. Okay? So this is an example of one of the properties I own, where we have our closing costs and then our refinance costs, all of which pretty much the same thing. So we're putting that all as one. Here's my basis, $15,645. And then my accountant will do the calculation. Here's what we're going to depreciate, or in this case, amortize this year. And here's how much we've done totally. Same thing with the building. We bought the building for $50,000. We're depreciating $18,818. Here's my capital improvements, $75,000. We're depreciating $27,556. You can see land here is not depreciated at all. So you're gonna get a statement like this. You're gonna get it after the end of the year. And so you need to go in and make that journal entry. These are really simple. This is going to be 12/31 of the year of the taxes. And we're just going to do depreciation. Now I'm going to use usually one account, but I am going to separate out the different lines here. Okay. So we are actually reducing the basis. So we're going to be crediting here. And in this case, I have $992. And this is going to be amortization of closing refi costs. Okay. Make sure you indicate your class. There's my depreciation. I'm going to do another one for the building itself. Okay, and this is, we're taking $18,818. All right, and then the last one we're going to do is our capital improvements. And so we got $75,793. Now this is me reporting that to the CPA. They have that on file. They might, by the way, take that and say, hey, you know, some of those you should expense. So we might tweak that a little bit. They're going to say $27,556 right here. Now notice the years. I'm not going to do this calculation myself. Okay, that's what we're paying a professional for. Okay, but we can still note the different lifetimes they got here. That's helpful to understand, like, when will it be done. So you might see appliances might have something like 5 or 10 on there, which means we're going to take more of a deduction in these first bunch of years to pretty much depreciate it to zero. And the last step here is our depreciation expense. It's an other expense. It's going to be the total of all those things. And this is just going to be 2,000, in this case 18, amort and depreciation. Okay. Now I would encourage you to do one single transaction for all your properties. These 4 lines, just copy them down for all your other properties as well. Put them all in one place. I'll save and close this. So what is awesome about this, there's my depreciation, that adjusts my basis. What I like about this is it's not up to you to do the depreciation calculation, nor is it up to QuickBooks to figure that out. All you need to do is log the basis accurately, log your basis, log your closing costs, log your CapEx, confirm it with your CPA, say, here's what I think should be going into these accounts, like building versus land, closing costs versus expense costs, CapEx versus repairs and maintenance. Confirm those amounts. Once you have them in there, your basis locks in, and then you're going to get a depreciation report from them. And that depreciation shows up here, and it also shows up in your net income as an other expense right here, depreciation and amortization. Now, one thing I didn't do here yet is move this rehab cost over to the balance sheet before filing taxes. I will do that in a future module. All right, so when it comes to capital improvements, just remember that we all need to deal with them. So even if you're a rental property owner, you need to know how to deal with them. Understanding CapEx, understanding profit and loss. It needs to go in one of those 2 places. Don't be afraid of it. Put it in a place. Talk to your tax professional to make sure you're doing it correctly. And definitely make sure you use products and services. If you like what you saw here, check out our end-to-end course on this entire subject and so much more, Real Estate Accounting Bootcamp. You can check it out, link in the description. But we're going to keep going with these free modules. We got module 4 coming up very, very soon, and I will see you there.